Hello, good afternoon, everybody. I'd like to welcome everybody onto this webinar. My name's Carl Taylor. I'm a consultant here at Oldfield Advisory. So thanks very much for joining us on this webinar. It's great to have a really good number of attendees on this webinar. And we're all still in lockdown. We've been in lockdown for more than a month now, which is quite hard to believe in some ways. We've been in lockdown for about 30 working days. That's really something that's never ever happened before in the whole history of the United Kingdom. And we've seen the effect of this really vary across our clients. It's affected businesses in a massive range of different ways. We've had some where businesses have been virtually closed down, right across the spectrum to other businesses where sales are double, triple what they normally would be. So there's been a massive variety of different impacts on different businesses. We've been having conversations with all of our clients over the last 5 to 6 weeks about the action plans to get through this and to come out stronger. And we really wanted to share some of the insights we've gained in a wider way on this webinar. Now there's a roadmap for options for lifting lockdown expected to be published, expected to come at the end of this week or at the very start of next week from the Prime Minister. I think he's expecting to do a statement on Sunday. But obviously we don't know the details of this yet. We don't really know when lockdown is actually going to end. We don't know the timescales. We don't know the details of what is going to be lifted first. However, what's really important is that we're looking forward and we're looking at what we need to put in place now in view of revving our businesses back up again so we can come out of lockdown in a strong position to really bounce back and move forward. So we've got 3 of us on the panel this afternoon. We've got Joe Brewer, who's a consulting partner here at Oldfield, and we've got Angus Brewer, who's also a consultant here at Oldfield. So just to give a really brief background on Oldfield Advisory, we've got some clients on the webinar, we've got some non-clients, some that won't have heard of us before. So just give you a really quick introduction. We're accountants and tax consultants based in Coventry. Our main mission is really helping our clients with strategies to maximize profitability. And we also help clients with smart tax saving strategies to help them reduce tax liabilities and help them keep more of what they earn. And at this particular time, we've got a real particular focus on helping our clients to navigate through today's challenges and beyond. So the agenda for the webinar. Firstly, we're going to talk about how to calculate break even, how to calculate it accurately, and really what it means. Then we're going to look at how we can use break even as a really powerful tool to ramp up your business over the coming weeks and months as we come out of lockdown. Then we're going to touch on cash flow. So we monitor the cash flow situation of majority of our clients. It's really part of what we do here at Oldfield, and we can see that there are going to be some challenges ahead over the coming months, and we want to share what we can see with you on that, and we want to share some strategies to manage and overcome these challenges. And then we're going to have plenty of time at the end for questions and answers. Any questions you've got, please do put these in the question and answer box. So don't put them in the chat box, put them in the question and answer box. And we'll do our best to answer those questions for you at the end. And also just to mention, we will be sending a copy of the slides around straight after the webinar. So look out for that email with those slides on. So I'm now going to hand over to Joe Brewer, who's going to kick us off on the first point about break even. Thanks, Joe.
Thank you, Carl, and welcome to all joining this webinar this afternoon. It's good to see such a good attendance. As you say, we really are in uncharted waters, aren't we, in this current crisis? And like you've been saying, we at Oldfield Advisory have been kept very busy over the last few weeks speaking to our clients and giving them extra input, helping them reshape their budgets and obtaining the various grants and cash available from the government. It's actually quite remarkable just how much is available, isn't it? The government have really done a very good job in providing all of those grants and financial incentives to help us through. And just as a point of interest, to date, we at Oldfield have claimed just over £540,000 in the job retention scheme grants. That's the furlough grants for our clients, and that's really just for the first month. So huge amounts of money involved. What's more, those payments have been received now by those businesses, so very quick turnaround on the actual payment. As a bit of an aside, someone did a survey on accountants doing the furlough claims for their clients, and 63% said they were charging for that, and 37% said they were not charging. They're doing it free of charge. So we at Oldfield are in the 37%. We're not charging extra to our clients for preparing the furlough claims. We made a decision to step forward and give this extra input free of charge. So just when our clients need us the most, they get the most support. So I wanted to spend a few minutes on the importance of knowing our break-even point. And just before we kick off with that, we had a poll for everyone to participate in, which should be coming up on the screen. So this is quite simple. It's a simple question. Do you know what your daily break-even is in your business for today? So do you know what your break-even is right now in your business? So just click on that. Just click either yes or I'm not sure, and just submit your answer, and we'll good. So it's there's the results then coming up on screen. We've got quite a obviously able bunch of people on the call this afternoon. 56% say they know what their break even is right now, and 44% said they're not sure. So that sets the scene. So we're going to, for those who don't know how to calculate break even and what your break even is, hopefully this will guide you through it. But for those who do know, this is how to use that break even. So this crisis has seen many businesses facing a significant drop in sales revenues. And as a result, they're running at or below break even. So a company that fails to make enough sales to meet break-even point can quickly run out of cash and obviously the ability to trade. The current situation is making it more important than ever to ensure that you know your break-even point. I can't emphasize enough how important that is, and to know that helps you maintain your profitability and keep your business afloat in these very difficult times. So the definition of break-even is on the screen there. Break-even is the point at which your total expenses or your total outgoings and your total revenue are equal. And a break-even calculation or analysis is used to determine the level of sales you need to cover the outgoings of your business and to avoid losing money. So we're now going to look at some points here that could actually reduce that break-even point. So if you've got a very high break-even point, it can be actually quite difficult to achieve that, obviously in the current climate with reduced trading, with the various challenges we've got. So to reduce your break-even point, if that's really too high for your current level of trade, obviously you can look at reducing your costs. So consider reducing your costs such as overhead expenses and owner's drawings as examples. That will obviously lower your break-even point. Also, interestingly, if you increase your prices, if you're able to increase your prices on any of your products without impacting on sales, that will actually decrease your break-even point, because if you're charging more money for your product, you're actually making a higher gross profit, which reduces your break even. So please consider doing that in this time. Customers out there are receptive to price increases in some cases, but be careful that it doesn't impact your sales even further. The other point is, can you diversify? Can you either your service or your product offering to appeal to your current customer demands? And if you can, obviously, if you can generate more sales, maybe at a higher GP, if you generate more sales, that will actually help in this whole process. This only works, however, if it's going to, you generate more sales without significantly increasing your cost. Otherwise, you're going to push that break-even point back up again. So how to work out break-even? We're now going to look at an example on screen, and this is available as a download. So don't worry about jotting all of this down. You'll be able to see this in the slides, and also as a full guide available as a download on our website. So an illustration of how to work out break-even. You obviously, this is a monthly break-even, by the way, so these figures are intended to be monthly. You calculate what your overhead budget is likely to be for the month, in this case 48,000. Maybe you're making donations to charity, add those in. Owner's drawings, that's the actual amount that you're drawing out at the moment, which we've already said you might need to reduce. Loan repayments, most businesses have loans, hire purchase, some sort of finance payments that would need to go in that particular line. And then you work out a tax provision based on the drawings and loan repayments, which is normally we put in 25% of the drawings and loan repayments. That's just a simple tax provision on your break-even calculation. You add all of those together. On this example, it comes to 60,000, and let's assume you had a gross profit percentage of 30%. That would mean you'd need to generate £200,000 in sales every month just to break even. And obviously, if you're below break even, you're losing money, and if you're above break even, you're making a profit, which is fairly obvious. The current monthly sales, as an example, in this business are 100,000. So what this does, in the case of a loss-making business at the current time, the next step is that we can work out survival days for your business. This is only really pertinent where you're actually trading below break even. So once you've established your break even point of 200,000, put in what your current sales actually are right now, in this case 100,000, which means that at 30% GP you're generating 30,000, and you will forecast, you're likely to make a loss of £30,000 a month at that rate. So then you can put in the total of all your bank accounts. You can calculate that. In this case, we said 150,000, which obviously gives 5 months worth of cash, or 150 days, what we call survival days. Now that's a term that we use here at Oldfield. It's probably not commonly used, but it's a term that we use to work out just how critical a business situation is in the case of a loss-making business. So basically, work that out if you are making a loss, and that gives you a bit of a guide as to how long you've got before you'll run out of cash. And it would also guide you as to whether to take advantage of the business interruption loans that are available, or the bounce back loans that are available right now. They're actually quite easy to get, but obviously this survival days calculation will help you determine whether you need those or not. So please keep updating this. If you work this calculation out, keep updating it so you know exactly what sales you need to achieve to avoid losing money. Suggest updating it every month, because things are changing at least every month. And also prepare a version ready for when lockdown is lifted and your staff are maybe back in place. Maybe they're taken off furlough, so your costs are going back up again. Prepare a version ready for that day when the staff come back in to work again. So it's very important that we're not just sitting on our hands until that. We need to be very, very active in product innovation, marketing and sales, so that we have a good business to come back to, you might say. and a well thought out bounce back plan. So that's about it from me. Break even and survival days are really quite simple in concept, but very, very important in this current time in which we are. So I'll now hand over to Angus, who's going to talk to us about how to ramp up our business over the next few weeks. Thank you, Angus.
Good. Thanks, Joe. That's some really valuable insights into break even and how to calculate that. And as we've stressed, it's just so important right now that you're all over, you totally understand this concept of break even. So the title of this webinar was called Future Proofing Your Business After the Lockdown, or you could say as we're coming out of lockdown. So if we focus on that future proofing phrase, obviously we do believe it is key how businesses are going to navigate these next few weeks and months in a safe way. And those who survive will be ahead of the curve, and those who don't will be faced with severe challenges, and they might make history but not see the future. So that's what we want to have a look at now, is how we're going to safely rev up our business again in the coming weeks and months, and how we can do that in a safe way. So just before I start that, I just wanted to again just do a quick poll, if that's okay. So just really wanted to gauge whether you've got a documented bounce back plan in place. So the question is, have you got a documented bounce back plan in place for your company? How are you going to achieve what you're going to do in the next few weeks? And what staff you're going to be bringing back on, etc. Have you got that documented? So I'll just leave that open for a few minutes, a few seconds, Okay, so just have a look, see what those results are. So as you can see there, obviously a number of businesses are in progress with their bounce back plan, which is great. 47%, 49% haven't actually got anything in place yet, and a very small number have got a plan in place. So that's very good to know that, and that's why we're having a look at this and what we need to do in relation to the plan. So I thought in looking at this, we're not really using our cars much at the moment, but I thought if we just use a concept of using our cars for a journey, I guess the first thing we need to look at is planning our journey. So as we've said, we need to have a plan. We need to adopt a phased plan to bring our business back together again. And every business is different. But in a lot of cases where you have experienced a significant reduction in sales and have had staff on furlough, it's very key to just have that each stage clearly planned out. Now you might say, I don't really know what's going to be happening. I don't know what the announcements are going to be. Hopefully we'll know that in more clarity in the next few days, but just try and start to create something. Something is better than nothing in terms of a plan. And obviously it can be tweaked and changed as new announcements are made. And think about who you're going to be bringing back from a resource point of view. Think about your core teams, who you definitely need to get back in to get the business up and running. Prioritize your sales and marketing teams. Maybe you need some key finance, credit control back in the business. So also what we don't want to do is bloat up unnecessary admin and non-essential costs right now. And obviously at all times we need to be following government guidelines, because obviously we need to keep our people safe. They're our most valuable asset right now. So the second point was just, you might say, we're planned our journey. Now we need to actually, you might say, warm the engine and start filling up with fuel. So we need to actually be ramping up sales and marketing activities. Start filling the funnels again, rev up with inquiries, opportunities, get those sales and marketing wheels turning, start getting those opportunities coming in, and then just keep communicating with your customers. Communicate that you actually exist, you're open, up and running, and just be supportive and empathetic in your messages to clients, so you can provide them with confidence that you've got a plan to look after them. And you may even want to share what that plan is as you get that clearer. So that's just really important to make sure you get those wheels turning. And then the third point was, I think this is one of the most important points, is check the speed. So what we need to be very careful is, as we come out of this period, is that we don't change up a gear too early. We need to make sure that we've got sales high enough to sustain an increased level of costs. And this is really where that power of break even comes in again, because what you need to do is calculate your daily break even. And if you do that for each phase of your roadmap, of your bounce back plan, and make sure you include any necessary on costs as well, obviously relating to bringing staff back to work. But if you know what the break even is for each phase, if you know what the break even is for the phase ahead, the next phase ahead of where you are, you can aim for that number and make sure you're achieving that before you bring on those extra staff costs, bring them back off furlough, bring them back to work. The point here is that you can actually be completely in control. You don't have to run the risk of incurring a whole lot of extra costs with low sales. And the government furlough scheme has been an absolute lifesaver for many businesses as we've been in lockdown. But now we're coming back out of it again. The furlough scheme is just as valuable. It just gives you that massive opportunity to flex your workforce and therefore your cost base in line with your revenue. And we've been doing this with our clients, some of our clients. I was talking to a business last week and we went through this exercise. It's only a fairly small business selling fixings to the construction, quite a niche market they're in, but they're only at 50% of last year in their sales. So I found it quite tough, but I just found it really powerful to set out. In that case, it was a question of bringing back 1 or 2 employees at each step of the way. And we worked out what the break even was for each step, and they found it really, really powerful to know, okay, well, actually, so if we bring these staff members back, that's what our new break even is going to be. Therefore, we need to be aiming for that before we make that decision. And then the final point really was just to watch the dials, constantly watch your instrument panel, keep tracking. You cannot afford to keep your eye or take your eye off the dials at any point. So keep visually tracking your actual sales against break even every single day, every hour of every day if you can. Know whether you're winning or losing and ensure all of the team are aware. And also, once you've finished the month, actually pull out what your costs have actually been and compare them to what you thought they were going to be as part of the break even, and make sure that your break even is updated. Just keep it under review, keep tweaking it. And then obviously one instrument or one dial we do need to be watching is our fuel gauge. Have we got enough cash? Are we going to be running out of cash? Will we make it through? And Carl is going to be going through that very shortly. But I think you can see what we're aiming at here. So certainly in these circumstances we're in, and indeed all of the time, break even is not something you just do once and then forget about. Use it as a tool, not just to survive and keep afloat, but actually positively move forward. It empowers you to make the right decisions. It quantifies your plan, quantifies each stage of your plan in a simple way, and it gives you the peace of mind that you're driving safely. Don't forget that we want our business to be sustainable, we want it to be future-proof, and we want it to be successful for the benefit of you and your family. So I'll now hand over to Carl, who's going to talk more about cash flow. Thanks, Carl.
That's great. Thanks, Angus. Just before we dive into this cash flow point, I just wanted to run another poll, actually, just to find out a few things from those that are on this webinar. The question that I wanted to ask was, how do you feel cash flow is going to be in your business over the next 6 months? So you should get a poll coming up very shortly. So the options are good. We're going to be generating cash. Cash levels are going to increase. Okay. it's gonna work out okay. Tight means we're going to get through, but it's going to be tight. You know, we're going to be scraping along the bottom. And severely challenged, you know, we're going to have severe cash flow problems. So we'll leave that open for a few seconds, get everyone's feelings. Good, some interesting results there. So we've got 47% saying that they're feeling like cash flow is going to be tight over the next 6 months. Got a smaller percentage, 7% saying going to be severely challenged. But then we've got, you know, just less than half saying that it's going to be good or okay. So that's interesting. Because, you know, as I said at the start, we monitor the cash flow situation of the majority of our clients. It's really part of our DNA. We're really passionate about managing cash flow and liquidity. And it's our job to look ahead. And so that's really what we're going to talk about now. As Angus has touched on and Joe's touched on, you know, the government has poured in significant support to help businesses in this crisis already. And I think that's been appreciated by all businesses, really. You know, any businesses I've spoken to have appreciated the government support that's been available. But we need to look ahead carefully at when some of this support is going to end, and how that's going to impact on cash flow, how it's going to impact on our businesses. So from what we've seen with our clients and from looking ahead, looking at some scenarios, from a cash flow perspective, what we can see is there's likely to be a crunch point for cash flow at around the end of July, early August time. You know, I think, you know, broadly, I think there's probably going to be some cash flow challenges at that point for many businesses. The main reason really is that the job retention scheme is going to be ending at the end of June. So it's been a really valuable scheme to help businesses pay wages at this time. And as Joe's mentioned, we've been busy making those claims into HMRC to get those grants back. But the fact is that as it stands at the moment, that scheme is going to be ending at the end of June. So employers are going to be without that extra support for paying wages from July onwards. And obviously wages are a significant cost, and normally one of the biggest costs that any business has. So you know, in the last few days, the Chancellor has actually been saying that he's looking at possible ways to phase out the job retention scheme, so there's no cliff edge at the end of June, but there's not really been any promising details. There's not been any details coming out. So as far as we can go on at the moment, as far as we know at the moment, it is going to end at the end of June. Then VAT deferment has been a welcome scheme. It's just allowed businesses to delay making VAT payments that were due between March and June. But from July onwards, VAT liabilities are going to be due again as normal. So, you know, if you had a June quarter end, then you're going to have to make your next VAT payment on the 7th of August. And on top of this, as we pull out of lockdown, we might start to see some businesses who have severely suffered as a result of the coronavirus situation, or who were already in financial difficulty before the crisis. We might see some of those businesses starting to close or wind up, which could result in some bad debts. And you may well have lower customer receipts anyway around the July, August time, if you've been having lower sales now throughout the lockdown. So, you know, potentially there is going to be a challenge there across the board. So we need to look at ways we can manage that tight patch, that little bump in the road. We need to find ways of managing that. So I'm just going to go over some key points now. This isn't an exhaustive list of things, but it's some top things we need to think about. The first one there is just being bang up to date on your debtor collection. We really need to focus on that right now. Chase all outstanding debtors, get them paid on time. You know, with all the government support that's been available up to now, it's really important that you insist on getting paid on time. There's not really any excuse for customers not to pay when they're due to pay. So it's really important you focus on that now before we get to this July, August crunch point. If you do that, A, it will help boost your cash flow, and B, it reduces the risk of bad debts. Then keeping overheads low, it's obvious in some ways, but it's just, as we move out of lockdown, we've got to keep all outgoings as low as possible. It's not, just coming out of lockdown doesn't mean we splash out and go back to pre-COVID overhead levels. We've got to keep focused on sales, as Angus mentioned, as we have the team starting to come back from furlough, coming back again. We've got to get everybody focused on sales, contacting customers, maximizing our sales now, and also maximizing our contacts so that it increases our opportunities further down the line. Forecasting your cash flow is really, really important. We really believe every business must have a monthly cash flow forecast for the next 6 to 12 months. We know it's not easy because you'll have to make some big assumptions on sales. But you can test out different scenarios. You can try different levels of sales. And that's really, really valuable because it puts you in a very strong position. All the what ifs. What the situation might look like if sales go like this or if they go like that. And that puts you in a very strong position to be able to take action quickly as we go through the next few weeks and months. And then look at your funding requirements and in the light of your cash flow forecast. So obviously once you've got your cash flow forecast, that gives you a good understanding of what are our finance needs. And if you are going to need additional finance, well, we need to look at the options for that. You might need to look at, spreading tax payments using the HMRC coronavirus helpline to arrange to spread your tax liabilities going forward. You might need to do that. You might need to, as Joe said, look at potential for a bounce back loan, which were launched just earlier this week. Or you might need to look at CBILS, a coronavirus business interruption loan. There's options there that are available. So they're the key points. We just wanted to really flag up that point that there is going to be a bit of a cash flow challenge potentially over the coming months. And we need everybody to do everything they can to prepare for that ahead of time. As on all those points, we can help businesses with those points, with cash flow forecasting, looking ahead. That's really what we're passionate about. As a follow-up to this webinar, we're offering anyone that's attended this webinar opportunity to book in a free COVID-19 consultation call, just a quick call to catch up on the challenges that you're having, talk about cash flow management, talk about break even, any other questions you've got. So you can look out for the email that's coming after the webinar. So we're going to come on to questions and answers, and we've had good response on questions, which is brilliant. If you've post your questions in the question and answer box, as we answer some now, it might spark off some more questions, so feel free to keep pinging those in. So I'm going to read out the questions, and we're going to do our best to get these answered. So question number 1, and we've got here, is any tips for keeping expenses information up to date where we're actively working to reduce them in view of break even being as accurate as possible? Angus, I don't know if you've got any thoughts on that one.
Yeah, it's a good question because, as you say, it's a constantly moving situation, isn't it? As we go through these times, I guess really what you need to do is pull out of your accounting system, out of your account software, obviously kind of what your expenses have been. You may obviously then, if you haven't already, revise, kind of fine tune those based on what you need to budget those to be. So at lower levels in a lot of cases. And then really, you just need to, as I said, once you've got those budgets, you can then, at the end of a month, once all of your costs are actually in and everything's entered and reconciled and up to date, just pull it out of your software system again and just compare your actuals against the budgets. Because it's one thing to set the budget, but it's one thing then obviously to make sure that your actuals are correct, and then you can tweak your break even accordingly, if that makes any sense.
Yeah, that's good, Angus. And what I would say as well is think about break even as a more forward-looking tool. It's not really about looking at what my expenses were last year and saying what was my break even last year. It's about looking ahead. So what I would do is before the start of each month, I would go down every line of overheads and look at it and say, what are we going to spend on this next month? What is our month budget going to be for next month? And work out your break even based on that. And then I would schedule in a catch up on it every week as you actually go through the month, and just quickly go down those overheads and say, actually, are these relevant still? Has anything changed on that? You might come across one where you say, actually, yeah, we managed to cut that off in the end. So you can zero that out. And so then you're just constantly reviewing it and keeping up to date. Hope that answers that question. And we've got another one here. We found our application for a coronavirus business interruption loan scheme gone into a black hole. Struggling to get a response from the bank. Is this typical, or is this just us? So that's a really good question. We've found there's been a massive variety of different situations on this. It just basically depends what bank you're with and what your relationship is with your bank. If you are having challenges, you might need to look at trying someone else, trying a different bank. Obviously, it's not really for us to say who you use exactly. If you haven't gone as far as actually making an application, if you haven't gone as far as actually making an application where the bank would have done a credit check and so on, if you haven't gone that far, if you've just literally asked them about it and they just haven't responded, well then you may need to look at a different bank. We have got a tool that we can use to actually go out to the market to look for different options. So that might be something we could look at. Anything else anyone else would say on that, Angus or Joe?
I think that covers that point, Carl. That's good.
Good. Can you say any more on the 2 government loans you mentioned and what makes a company eligible or not? So I guess we're talking about the bounce back loan, or we're talking about the coronavirus business interruption loan. I can start on the bounce back one, and I'll get Joe to talk about the CBIL as well. The bounce back one is really meant to be open to smaller businesses, although there's not any particularly clear definition exactly of what a smaller business is. But basically what it is you can get it's 100% government-backed loan from a bank, and it's up to 25% of your turnover with a cap of 50,000. So £50,000 is the maximum loan you can get. And the idea is it's meant to be really simple to get hold of. There's very little in the way of information you should have to provide to the bank. And in terms of eligibility, basically there's only 2 things. One is that you're based in the UK, and the other is that you've been impacted negatively by coronavirus in one way or another. So, it's meant to be a really easy, quick loan that you can get hold of. But on the coronavirus business interruption loan, Joe, do you want to?
Yeah, just briefly, that's obviously aimed at larger sums of money, isn't it? So that you can borrow up to £5 million on that particular loan scheme, but up to 250,000 without any directors' guarantees or anything. So they're making it as easy as possible. However, the banks have been slow, as someone pointed out in their question. The banks have been slow in actually responding to requests on that one. If you need money more quickly, the bounce back loan is a lot quicker and more rapid in the response, I think, from what we picked up. And like Carl, as you mentioned before, if anyone would like to shop around a little bit more, we do have a search facility, don't we, on that? So
yeah,
we could perhaps help out on that point. Don't know, does that?
Yeah, that's good. We had just got another question just linking with that about security banks will be looking for when providing a support loan. Well, on the bounce back loan, they won't be looking for any because it's 100% backed by the government. The coronavirus business interruption loan is a little bit different, but there are certain limits on that, as you mentioned, Joe.
And I think the other question relating to it is whether you can have both. Well, I think the answer to that is no, isn't it? You can't have both types of loan at the same time. There is a very good website called, we can put this in the follow-up email, britishbusinessbank.co.uk. It's a really good website which is gives you all the information about both of those loans. So we'll get that circulated.
Yeah. And just to point out as well, I mean, on both of those loans, the government pay the interest for the first 12 months. So, you know, if you've got a coronavirus business interruption loan, if you've got CBILS, you can't then apply for a bounce back loan. If that makes sense. But you, so yeah, a couple of other questions coming in. There is another question on any ideas on how to claim small business grant funds when you seem to be eligible but have not received anything, nor been notified by the government helplines will not enter. And the government helplines will not answer.
Yeah, just a couple of points on that one, Carl. The 10,000 or £25,000 grant funding is actually available through your local council. So that's for either people in retail or hospitality or that are claiming small business rates relief. Any of those categories can claim a lump sum cash grant, and that is available through your local council. So whoever you pay your rates to, they should have contacted you already, but if they haven't, get onto your local council for that one. The self-employed support scheme from HMRC, you should be receiving, some have received them, but they said some will be next week, an email or a letter from HMRC telling you how to claim on that. And there's a link on there that you can go onto to see if you're eligible for that self-employment support scheme. So I don't know if that helps. Again, we're happy to send those details around as to how to access those.
Good. Thanks, Joe. Another question we've got. Some questions on actual cash flow forecasting. Do you have a template for cash flow? I really struggle with it, so I end up not tracking it and struggle with forecasting VAT. I guess it's probably not an easy one to kind of cover all the detail exactly right now. But what would you say, Angus?
Yeah, no, it's a good question. Obviously, as we've said, it's very important to have a month-by-month cash flow forecast. I guess sometimes the question comes, should we have a weekly or should we have a monthly cash flow forecast? A monthly cash flow forecast is as we've said, is a must as a start. And And as you say, over the next 6 to 12 months, look at scenarios and evaluate the impacts. And I guess you just need to, as you said, the VAT is important to factor in. But if you know what percentage of sales and what percentage of purchases relate to, kind of have VAT on, obviously if you're exporting or importing, that can have a difference. But if you know what percentages, that's you can apply that as a generic rule and be able to calculate what the VAT impacts are of that. A weekly cash flow forecast is something which a lot of businesses do, and that comes down to your capabilities that you can manage in-house if you can. So that just gives you a bit more hands-on, kind of what customers, what suppliers we'd be making payments to next week. Keep a closer eye on that, and particularly relevant where you're going through a tight cash flow phase, which a large number on this webinar today said they were going to be. Just keep track of that on a weekly basis. We have actually got a template for the weekly cash flow, which again is a download on our website. So there is a template there for a weekly cash flow, but on a monthly one, you do need to give some more thought, make sure you've covered everything, which we can help with if anyone is needing assistance with that.
Yeah, that's good, Angus. It's probably not, what we found in the past is just providing a template for a monthly cash flow forecast hasn't been enough, if that makes sense. We normally found, really what people want is, what it really needs is a bit more experience and a bit more know-how in terms of actually how to forecast things out, as opposed to just a template. And so that's obviously what we're here to do. That's good. Any more questions? Got another question here. Can I put staff back on furlough again if I've brought them back too early, so as not to risk running below break even? Joe, you got any thoughts on that one?
Yes. Obviously, you can bring staff back off furlough at any time, but if you want to claim the funding for that, you just got to bear in mind the 3-week rule. They've got to be on furlough for a minimum of 3 weeks to be able to claim the furlough grant. So just bear that in mind. But actually, in actual physical fact, you can bring staff back off furlough at any time, if that is answering the question.
Yeah. Yeah, that's good. It has to happen in 3-week intervals, if you like. But it can be flexible. Good. Good, excellent. I think that's most of the questions answered. So excellent. We'd like to thank everybody very much for joining us. And if there's been any more questions that you had at the back of your mind that you thought of, that you'd like to ask us or that we haven't answered, then please feel free to get in touch with us or to book in a free COVID-19 consultation call, and we'll be more than happy to discuss any further questions you've got, and to talk about preparing your business for ramping up once again. So I'd like to thank everyone very much for joining us again this afternoon. It's been great to have you on the webinar. Look out for the email that's coming very shortly, with the slides and with a link to the break-even document, and with the link to book in your free COVID-19 consultation call. Thank you very much.